Imagine your flagship crypto product suddenly frozen. Bank partners pull out, regulators call, users panic. That's the kind of systemic shock MiCA is designed to prevent. In this module, we'll rewind to the Wild West era of crypto to see why the EU finally drew a line. Now picture billions flowing through products described in memes and hype, instead of clear legal terms. Would you let your customers or your balance sheet depend on that? That fragile, trust-on-vibes environment is exactly what MiCA was built to fix. When those early platforms imploded, the core problem usually wasn't the blockchain code. It was leadership, weak controls, vague responsibilities, unchecked conflicts. As value disappeared, regulators were left asking a blunt question: who is actually in charge? Take EuroChain. On the surface, it looked like every investor's dream: fast growth, glossy branding, and a hot EuroX token. Behind the scenes, the founders ran everything: platform, trading, and key decisions through private chats. There was no real governance, no separation of duties, and customer money blended with house trades. That mix is exactly what keeps regulators awake at night. A meltdown like this rarely begins with outright fraud. It usually starts with overconfidence. Leaders assume the peg will always hold, so they skip stress tests and gloss over clear user terms. When markets turn, they improvise instead of following a prepared plan. Each delay destroys trust, then liquidity, then solvency. The real problem isn't volatility. It's leadership failing to prepare for predictable shocks. Now extend that to a popular token melting down overnight. Retail users are wiped out, banks find themselves unexpectedly exposed, payment flows seize up, and even trust in the euro is questioned. That cascading risk picture is exactly what MiCA targets. This is the political pressure cooker MiCA was born into. Angry savers, burned institutions, and headlines demanding that someone take control. In that environment, leaders are expected to prove that innovation and responsibility can coexist. Before MiCA, the EU wasn't one crypto market, it was 27 different ones. Each country had its own rules, licenses, and expectations. That meant no real passporting, higher costs to expand, and plenty of loopholes. Good actors struggled with complexity, while bad actors shopped for the weakest regime. You can think of MiCA as a direct response to the EuroChain story. Hidden risks and hype are tackled through mandatory white papers and clearer disclosures. Insider trading and conflicts of interest are addressed with explicit market abuse rules. Liquidity crises in stablecoins face strict reserve and redemption requirements. And the operational chaos we saw earlier is met with liability, safeguarding, and custody obligations for firms holding client assets. Under MiCA, 3 types of regulators matter for you. The EBA focuses on large, potentially systemic stablecoins and their prudential soundness. ESMA concentrates on CASPs, market integrity, and investor protection. And your day-to-day reality is shaped by national authorities who supervise and enforce locally. MiCA also forces a strategic decision. Authorization is slower and more expensive upfront. You're effectively prepaying in legal work, governance, and operations. In return, you gain something the Wild West never had: reliable access to the entire EU market and far less regulatory uncertainty. So the real question isn't, is MiCA cheap? It's, what scale are we aiming for? Once MiCA applies, the game shifts. Previously, winning often meant launching fastest and fixing problems later. Now strong governance becomes the real advantage. Boards must be visibly accountable, management has to be fit and proper, and compliance needs to be baked into product design as a core trust signal. MiCA's broader promise is to turn crypto from a hype playground into infrastructure serious money can rely on. Institutions only move when they see segregated client assets, clear liability, and robust counterparty risk controls. Your strategic shift is this: design products as regulated platforms, not yield casinos. The reward is access to banks, funds, and mainstream capital that were previously off limits. The Wild West phase of crypto is ending. Leaders can't just chase growth. They need durable, trusted businesses. MiCA is the EU's bridge: clear rules, stronger governance, and real consumer protection. Keep asking the EuroChain question. And remember, aligning with MiCA now also prepares you for emerging global standards. In the end, MiCA crystallizes a leadership choice. You can treat regulation as scaffolding for your product, design with it from day one, and turn compliance into a trust and funding advantage. Or you can wait, grow fast on shaky ground, then burn time, cash, and reputation retrofitting. In the EU crypto market, regulation isn't background noise anymore, it's part of your business model.